All right, today we are all about following the money. We're going to show you how one single thing, the US dollar, is kicking off a huge chain reaction across the entire global market. And that's creating some major opportunities in tech stocks and even precious metals. Let's jump right in. You know how global markets can feel, right? Just chaotic. A million different things pulling in a million different directions. Well, our goal today is to slice right through all that noise. We're going to connect the dots and find the real trend to see exactly where the smart money is flowing.
So this is the big one, isn't it? The question on every single investor's mind. With so much volatility out there, we're just going to follow the capital, plain and simple, to find a clear answer. And believe it or not, it all kicks off with one single chart.
You know, every big market story, it's kind of got a main character. And right now, that character is without a doubt the US dollar. What it does next is the trigger for pretty much everything else we're about to talk about. Okay, so for a second, let's just push all the daily noise aside. The real fundamental story that's going to drive assets around the world for the near future, it begins right here, with the dollar index. What happens next is absolutely critical. So here's what's going on. This is the key technical breakout we're watching. The dollar index has just punched through a huge resistance level at 98.5. Now, if it can just hold its ground and close the week above that level, that is a powerful, powerful signal. It tells us that this long period of just moving sideways, what we call consolidation, is probably over, and the next leg up towards 99.5 has already started. Okay, so if the dollar gets stronger, what happens next? Well, it's pretty simple, really. The money follows. Let's take a look at how that builds. This right here is the fundamental relationship you've got to understand. A rising dollar, it acts like a giant magnet, just pulling in capital from all over the world, especially from Europe. And all that money, it has to go somewhere. So you might be asking, why is this happening? Well, it's really a one-two punch. First, as the dollar goes up, the euro goes down in comparison. That alone makes European investors want to move their money into US assets just to protect its value. And second, US interest rates are just, well, they're more attractive than what you can get in Europe. The result? A flood of cash coming into both US stocks for growth and US bonds for safety. And all that money has to go somewhere, right? That brings us straight to the US stock market, which is really the main beneficiary of this whole global money shift, with one sector just completely leading the charge. So where is all this cash pushing the market? Let's get specific. There's one number I want you to keep in your head, 7,300. Based on the money flows we're seeing and where earnings are headed, this is actually a pretty conservative target for the S&P 500. And this chart just lays it out perfectly. That first target, the conservative one, is that 7,300 to 7,400 range, which is about a 10% gain from here. But then there's the other scenario. If that FOMO, the fear of missing out, if that really kicks into high gear, we could see an absolute surge toward 9,000. That's a potential 33% pop. Now, I know what you're probably thinking. This sounds a little bubbly, right? But check this out. This is what strategists over at Goldman Sachs are saying. Peter Oppenheimer points out that, yeah, tech valuations are a bit high, but we are not in a balloon situation. That suggests there's still plenty of fuel left in the tank for this rally. So let's just be clear. The crucial point here is that this isn't just wishful thinking. It's being pushed by two really powerful engines. First, you've got the whole AI and tech story, which is generating real profits, especially in the Nasdaq. And second, you've got that strong dollar we keep talking about, which is basically forcing global money into the US, creating this constant demand. Okay, so we see how the dollar is driving stocks. But there's this whole other universe that's playing by a totally different set of rules. Let's switch gears and try to piece together the crypto puzzle. The crypto market was on a tear, right? But it slammed into this massive wall at the $4 trillion total market cap and just got knocked back down. And ever since then, it's been in this holding pattern, what traders call consolidation. The market is basically coiling up like a spring, just building up energy for its next huge move.
So in a market that's just moving sideways like this, everything comes down to watching these key levels. This table basically shows you the lines in the sand for the big players. For Bitcoin, if it can get and stay above 123,500, that could be the signal for the next rally. On the other hand, a drop below 121,300, well, that's not a great sign. And we're seeing really similar make-or-break levels for both Ethereum and XRP.
And here's the really important part. Whatever crypto does next, it probably won't have anything to do with the dollar. It is marching to the beat of its own drum. We could see this whole consolidation period finally resolve itself maybe around mid-November, and it'll be driven completely by its own internal market forces.
All right, for our last section, let's talk about an asset class that usually moves with currencies, but right now, it's telling its own unique story. I'm talking about precious metals. The big question is, are we looking at a golden opportunity here? When you look at gold and silver, you're actually seeing two very different stories play out. Gold has kind of become the FOMO asset. Everybody's afraid of missing the next big run-up, so the strategy has just been to hold on for dear life. But silver? Silver's the really interesting one right now. It's been lagging behind gold, which means it potentially has way more room to run. It could see a much stronger, more explosive move up. And when we're talking about silver's potential, man, there is one number that matters more than any other, a price that has acted as a hard ceiling for decades. And that number is $50. It's not just a price, it's a massive, massive psychological barrier.
And this brings us to a really cool final idea: psychological resistance. It's what makes that $50 level in silver so incredibly powerful. Think about it. It's a barrier, simply because everyone believes it's a barrier. When enough traders all decide they're going to sell at a certain price, well, it becomes a self-fulfilling prophecy. And honestly, understanding that is key to understanding how markets really work. It's not always about the numbers on a spreadsheet. A lot of the time, it's about the psychology of the crowd.
So there you have it. From the dollar's big breakout all the way to the psychology of silver, that's kind of how all the big pieces of the market puzzle are fitting together right now. That's all we've got for today. Thanks so much for joining us. If you found this useful, your subscriptions and likes are always appreciated.